Habari zenu? So my lingo is too good. Those trips were not in vain. But I'm still learning. You know, we say pole pole. Pole pole. Ndio mwendo. Yes. You know, such a privilege to be back home. Kenya is home to me. Spent a good year in Nairobi. So when I'm always here, I feel very much privileged, and I'm home. And before I get into my presentation, there's something that we always talk about and something that we always say. We say, until or unless the lion tells the tale or tells the story, the tale will always glorify the hunter. M-Pesa has been an amazing, amazing win for the African continent. And I think we need to appreciate the way they have brought the continent or given the good name to the continent. Let's just give M-Pesa a round of applause for such an amazing job and the work that they have done. I've sat in a lot of presentations, attended summits, where breadcrumbs of M-Pesa are mentioned, right? Around how they're transforming the continent. And I think we all need to play in the same field with them to improve the lives of our people. So also not an easy thing to now come and try and dampen the mood, like what Gerard did when he started. But I'm going to try my best, Gerard. I'm going to keep the positivity going, bring the voice of the customer to your shows, make you understand what our customers are saying, right? What our customers are feeling. The economy has been tough. You've heard from Gerard about how the economy is doing. But we'll try and also give you some insights into what the sentiments of our customers are, what are they thinking about the economy, and how we as business people can take advantage of that, can learn from that, and can use that to improve our own strategies. So in my section, I'm going to cover about 3 main areas. I'm going to look at the financial health of our consumers, right? How they're really feeling about the changes in their household incomes. And some of the consumers were here, right? We know how COVID, that Gerard mentioned, has really impacted our lives, you know. I was in Nairobi 2019, 2020. Lee calls me and say, "Where are you?" I'm like, "I'm in Botswana." He's like, "Go home, we're closing." And that's when I realized that I needed to sweep under my bed. I needed to paint the walls, right? So COVID changed our lives, and we're still reeling from that downturn of COVID. So we're still feeling that, right? Jobs were lost after COVID and during COVID. So those effects are still within us. So I'm going to cover a little bit of that and show you what the sentiments are, where the shifts are. I'll also touch a little bit about financial inclusion. Like what Maurice said, it's a dear topic to my heart. And the work we are doing in some of our markets, in Rwanda, in Zambia, in Malawi, even some of our sub-regions, speaks to what sits at the heart of TransUnion when we talk about information for good. How do we unlock data to become a critical ingredient in advancing and giving access to credit for our people? And I think if that's what sits at the heart of what we do as business people, we will be driving purpose and we'll be solving some of the critical problems that matter, right? And lastly, I will just give you a bit of concerns around fraud, what our customers are thinking. You know, we spoke about how COVID accelerated digitalization, right? As you saw for one thing, another problem is what? Emerges, right? And I'll touch a little bit about the concerns around fraud. My learned colleague, who is an expert in fraud, will come and then deep dive into how fraud has really affected some of our businesses or even some of our people. You hear funny words that I had never heard. I used to know phishing, and then they start talking of vishing, they start talking of smishing. I don't even know what's the next word. But all of that is fraudsters always trying to get a little bit of our back, right? And affecting the lives of our people. So I'm going to touch a little bit about that. But let's get right into it, right? Last year, when we did this presentation, it was presented by one of my colleagues, Vehan, who's, for such an amazing job, moved to one of our global businesses in Hong Kong. We compared the sentiments of what we saw in Kenya against some of our regional businesses. We looked at South Africa, we looked at Zambia and Namibia, right? But this year we thought, let's probably do it differently, give you what that previous sentiment was in comparison into this year's sentiment, right? And what you can see is that the story continues to actually what Gerard said. The economy is struggling, right? It's probably limping. So if the economy is limping, I wonder what we are all doing. Probably we're on crutches, right? It's tough for all of our people, right? The household income is shrinking, is deteriorating, and there are various reasons why that might be, right? Why the household income is shrinking. And in the survey, there were quite a lot of questions that we asked our customers as to, or consumers, why they felt their household income was shrinking. And I'll show you guys some of the top 6 that came about. But again, it's not anything new that we don't know what could be the reason why the household income is shrinking. And for me, the question is really not to look into why the household income is shrinking, but more into what can we do to manage that, right? You know, during COVID, one of the things that we quickly moved into was debt restructure, right? Holiday payments. Government moved in and said, guys, you need to fix this as soon as possible. And we thought maybe it was only short-lived. But I think it's an opportunity for us to think more about how do we actually manage that in terms of debt restructure, in terms of giving relief to our consumers. I'm not sure if Kevin is in the room, the chairman of the Digital Financial Services is in the room. I'm not sure if he's in the room. Where's Kevin? Oh, Kevin, I read an article where you wrote about how debt review is going to be a game changer in this period, right? Because our consumers are battling. And you outlined in your article actually how we need to start thinking about debt review as businesses, especially in the fact that, you know, the digital lenders are being regulated or in the process of applying for licenses. And he really wrote an amazing article which I advise all of you to probably have a look at. And he touched on the debt review, that we need to think about debt review as an enabler or as a mechanism to assist consumers, because household income is really deteriorating. And when you look into some of the top 6 reasons that we saw was loss of job, 39%, right? If you look at that, 30%, sorry. In 2023, most of our consumers cited the loss of jobs. It's tough out there, right? And companies did not also shy away from salary adjustments. We saw that some of our salaries were adjusted. So if you think about it, these consumers are your customers, right? They're battling, they're losing jobs, salaries are adjusted, but we're keeping maybe the facilities the same. So we need to think about that to manage delinquency. If we really want to manage delinquency, we need to reduce bad debt in our space. We need to really think about debt review as an enabler or as a mechanism to how we can manage bad debt. But, you know, these are sentiments. These are consumers saying these are some of the effects that they felt in as far as household income goes. And you can see how 2023 is probably more compared to 2022 because of what, I mean, obviously Gerard shared. But what was also interesting is the fact that closed businesses, for me, was an interesting insight, right? Some of the consumers citing that businesses is closed. And I loved what M-Pesa said, that they want to enable us to do better, right? They want to enable business people to plug into the vast consumers and customers that they have. I think the Kenya Revenue Authority cited that about 85% of businesses are struggling to pay corporate tax, right? So if you think about it, businesses are what? Are battling. If businesses are battling, what more of our own consumers, the people on the ground? So it's something to think about. How do we manage all of this in our daily processes, in mitigating risk and the downturn? So whenever you look at sentiment, you also want to project it forward-looking. And we ask the question, so how do you see your income in the next 12 months? And I was like, Gerard and I were reading from the same scripture, resilience. Right? Kenyans are? Am I preaching to the choir? Kenyans are? Resilient. Kenyans are resilient. So if you look into the statistic, it shows you that as much as there's a slow, slight drop, right? But it still gives that resilient feel and resilient view in terms of forward looking. They still believe that things are going to get better. They still believe things are going to improve. They're still looking to us as business people to improve how we actually offer them services. So they still believe their household income is going to improve in the next 12 months, and they'll be looking all up to us, right, to improve their lives, to give them access to credit. So if they are believing and thinking like this, my urge to you as business people is, how do we also find ourselves to understand how they behave as consumers? So data becomes a critical ingredient into this. Insights into how they're behaving will be good for you to actually start segmenting your own base. And what we also did is we went further to segment the 2 generational dividend to check, okay, which of the 2 generations are more positive, are more forward-looking in terms of how the household income is going to shift. And not surprisingly, your Gen Z and your millennials obviously are the most optic ones, right? They're the very most positive ones, and they did show that through the feedback we received. About 86% with the Gen Z, 82% with the millennials. But with that BMA, Gerard, I think, shared some very insightful thoughts about what the future looks like. Anything could happen to dent this, forward-looking sentiment, and they could find themselves in tight spots. So I think it's important that when you are lending to this type of generations, you need to think more about how do you manage the risk going forward. What is your collection mechanism if things does go bad? How do you monitor that best in terms of pre-delinquency alerts, or even at a risk level, how do you offer credit at this type of cohorts? The Gen X and the baby boomers, in all the presentations I've always done, I say they're very much life-oriented. When you think about this cohort, very much life-oriented, they don't want to take a risk that would disrupt their lives, right? So as much as they're positive and as much as they're forward-looking, that risk threshold or band is very, they take risk with a bit of caution, right? And we know, we've seen that in the studies that we have presented. So we cover that. And then the next question is, okay, now that you are positive about how income will change in the next 6 months, let's get it a little bit, let's press the accelerator a little bit and see if you put your seatbelt. What is your sentiment around, or your feel around, settling a loan or paying it in full, right? So if you look into last year, the sentiment was about 64%. I'll be able to pay a loan in full. I'll be able to settle my debt in full. Now, when you bring it to this year, to probably what we've all heard, the sentiment shifts a little bit, right? Because this year is tough, guys. If you think about it, we had a visit from the First Lady. She came here, I think it was sometime this year, right? Was it Q1 or Q2, the First Lady of the US? Jill? So sometime this year, right? Yeah. When she came, her mission was one, to try and find a way to alleviate drought, to relieve drought, right? And those some of the impacts are affecting consumers. It's like drought is eating the Horn of Africa. Can we go and find relief mechanism to drive that? Gerard spoke about tax. We had the Financial Act this year, right? And this tax introduction has affected a lot of us in terms of how we even manage our own liquidity, how we even manage our own access to credit, and even finance in our pockets. So you can see how that sentiment then shifted to, we'll still be able to pay, but it might be a little bit tough. And then what we did is we went and we split it again into the 2 cohorts. So your Gen Z millennials versus your Gen X and baby boomers. And that's where you see how the shift starts happening now, right? The millennials and your Gen Z, you need to tread with a little bit of caution. You need to manage how you lend them. You need to monitor how you lend to these cohorts. Because the sentiment is, as much as I'm positive about the fact that my income will change, I don't know whether I'll be able to pay off my debts in full, right? So this is the voice of the customer. So you need to start looking into that, and you monitor your own best, work within the ecosystem, look at data points that will help you to understand how to manage this generational cohorts. The Gen X and baby boomers, as much as there's still concern, but you can see that if you look into the able and unable to pay, there's still much very positive that they can pay, because they are a well-balanced risk cohort. So it's something to think about when you are defining your lending strategies. And then one of the sentiment questions was, okay, now that you are talking about that you look to service your debt in full, or you might not be able to service your debt in full, what are your plans around it? How do you intend to actually address it? And I think with all the stuff that is on the slide, what was interesting was the point that says, I want to pay partially. I want us to be able to service. You know, in credit risk, one of the critical variable we look at is willingness to pay, right? I mean, affordability is one. Affordability is one. We all provide our pay slips, we show you, but the willingness to pay is a different ballgame on its own. So if you look at this, one of the highest ranking response was pay partial amount. So the willingness to still pay is there. That's why I started by saying we need to think more about restructure of debt. We need to think about payment holidays. And I think contactability is one of the greatest components in how you're going to be in front of your customers. They're willing to pay. Don't shy away, engage them, contact your customers. Imagine you get a phone call from your lender and say, hey Sam, we just wanted to say we're reducing your debt by about, we're giving you a payment holiday. You pay it next month. You're all smiling and laughing because you would want to receive that call. So imagine how your customers would feel if you start thinking about. So contactability, we're doing a lot of work with some of our partners and clients in the regions around data programs. And I spoke to a lot of CEOs in the insurance space, and they're all trying to improve their customer contactability. They're all saying we are moving from being product-centric to more customer-centric. We want to be as close as we can to our customers. We want to know them. We know how much they are doing. We understand their pain, and we want to work with them. So contactability becomes a key component when you look into this. As we're trying to wrap out the financial health segment with a few slides. So some of the sentiments we're looking into your budgets in your households in the last 3 months. Like, so how did you manage your budgets? What were the things that you were looking at, and what were the things you were considering? And discretionary spending in the last 3 months was one of the things that Kenyans had to cut down on, right? But I still had music yesterday when I was driving around. When I was coming in, like music and nyamachoma, they might cut down on a few, but nyamachoma, right? Discretionary spending, right? Digital services, subscriptions, like, Jim, we'll figure it out, right? So the notion is, how do we reduce to create a little bit of liquidity in our pockets? Because there are tough times ahead, right? And I think for me, this shows that we have a people that are very much aware of the circumstances and the environment that we are in. We have a customer base or a consumer base that is in touch with the reality. And then when you cross over to debt and savings, what was interesting for me in terms of the survey was save more for retirement, right? I don't know who said what, but Kenyans are starting to think more about the future, right? They're starting to save more. So in terms of your products and services, think more about how you introduce things like investments, savings, as a way to incentivize your consumers, because they're very much key on wanting to save for the future, right? It's something that we think we need to look at and consider. And then we looked into, so what does the next 3 months looks like? Very much the same. You know, bills and loans still top of the list. We want to be able to service our loans. We want to still be able to pay our bills. Digital services between 22 and 2023, the comparison is still much the same. And I think it's important that when we look into these insights, we see where our customers' focus is, right? What is the concern of our people? How do we actually meet them at the heart of their concerns? And what we then did when we looked into this, like I said earlier on, we always try to go into the demographic structures and do some comparisons of your Gen Z and millennials, because they're a cohort you want to be able to manage because of sometimes the volatility. Especially the Gen Z, new to credit, still getting excited about getting their first loan. So you need to be able to put in measures in place to mitigate any downfall. But when you think about the next 3 months as we're going into the festive season, it's important that we monitor if they are trying to pay a bill, how do we encourage that, right? If they're trying to settle a loan, how do we encourage that? Or how do we do champion challenge of say, hey, pay 50% of your loan, you get a bonus in this way, right? Or you get a month saving, try to think of strategic ways to really get your consumers and your customers to settle their debts. So in summary, as we close on to this chapter, right, what are the things we focused or looked at? We saw that less than 30% of all households' income had shifted, depreciated, right? Very much clear. This is something that we have all agreed on. Job loss, very big topical issue in the market. So we need to think about how do we encourage, and I really love the M-Pesa story, how do we encourage access to new creation of innovative ways for our people to participate in the SMME sector. You find whenever somebody loses a job, they're going to try and start a small business, right? So how do we actually help them to get access to credit, to start their small business and fund it, right? And optimism. We spoke about it, very much positive people, and I think we need to ride on that positivity. We don't need to water down the sentiments. And there's so much willingness to service debt. I want to pay, I might not be able to pay in full, but I want to pay my debt, and then I'm cutting down on my spending. I need to focus on the future, and I need to improve on that. So that wraps up the first segment on the financial health. I'm going to dive down into the second segment, which looks into financial inclusion, right? Like I said, it's a very important topic for me. We're doing a lot of work in the other countries that we operate in, and we're working with government, we're working with institutions to really remove all the barriers that have been in place, be it by policy or be it by any other form, to open up the market so that our people can have access to credit. Right. And I think as business people, we need to really think about this. How do we give that layer to our customers? But if you look at the insights, when we look at financial inclusion and extending of credit, 98% believe that having access to credit and lending products is essential to their financial well-being. It's essential. So everybody knows that. We need access to credit. We need access to financial products so that we can improve our well-being, we can improve our lives, right? And only 33% in this year compared to the 44% last year, right, believe that they currently have sufficient access to credit. And I think what's important for me is to underline the word sufficient. So you could have access to credit, but it's not sufficient, right? That's why when we look at our insights, we see that some of your customers, there's a lot of churn in your book because they're always looking for the better limits that they can get to improve their lives, right? So sufficient is very key when you look at access to credit. How are my consumers getting the best products and services that I'm offering? I was listening to Elon Musk. He said, sometimes we worry so much, and I'm sorry, I hope it's not a career-limiting move. We worry so much about profits that we forget about the product and service, right? He said, focus on the product, focus on the service, the profits will take care of themselves. Because if you're solving a need in the customer base, they will pay for it, right? Anyone who's getting a reward on a product will pay for it. So if you think about this, we need to really address the sufficiency element of access to credit. And then 55% compared to 60% last year planned to apply for a new facility in this year, right? And obviously the products that were critical for our consumers were personal loan, mobile loan, and credit card, right? And mobile loan is quite big because it's quick, you get it on the go, you solve some of your needs. Right. Now, when you look at the process of getting that credit, access to credit, so we focused on when consumers were interacting with your services, when they were on your channels, what was the abandonment rate, right? Maybe it's a question to you. If you look into 2022 and 2023, as much as, I abandoned the application, or I did not abandon the application, 58%. If you look into that, maybe the question is, have you improved your onboarding or your acquisition processes in terms of digital efficiencies, right? Is there stickiness into your processes, right? Because what you're seeing here is that consumers are either staying longer on the form. I don't wanna encourage the fact that maybe it's a bit of a desperation to say I need that access to credit, but I would like to pose the question if we improve stickiness in the process. And maybe we've done better with the fact that digital transformation is key to our businesses, right? But for the reasons why some of the consumers abandoned that application, I think what was top of mind is cost of credit. Our cost of credit is still high, and I think we need to do something about improving. If we look at efficiencies, we need to look at how we improve efficiencies for us to actually reduce cost of credit so that we can be able to offer more, we're going to be able to do more, and allow our customers to finish up the process when they get on our channels, right? So it's important that we start to really address issues of digital transformation, right? So that the cost of credit can also be addressed in turn. And it's the same when you look at the two generations, the Gen Z and the millennials. You know, the Gen Z, like what was addressed by the MD of M-Pesa, is the fact that these cohorts really want it on the go, right? So if your digital channels are not that efficient, you find that they'll drop the application because they want to have it quick, they want to have it as easy as they can get the services that you'll offer to them. Right, and we saw that the same was for the millennials in terms of the percentage. So in summary, for the segment that I just covered, most Kenyans believe access to credit is important. So we need to look into how much can we open our doors, how much can we open our services and products to them, so they can have access to credit. Some are planning to apply for credit this year. What are the strategies we are looking at, right, into ensuring that our products and services are at the forefront of them? This is the voice of the customer. They're saying, I will apply for a loan next year. I will apply for a loan in this festive season. So we need to think about what type of facilities we need to introduce in this season that we're going into. And personal loan and mobile loans was quite high on the sentiment that we received back from the customers. And then when we went to consumer empowerment, just trying to understand, are we also doing more as a business in as far as, you know, credit health goes? How easy is it our customers to understand the information that sits on their credit report? One of the questions was, do you believe it's important to monitor your credit report? Do you believe it's important to monitor your credit information? And what is critical is that, you know, we've seen this in business, that consumers or customers who monitor or who check on their credit information tend to be healthier in terms of how they manage their credit compared to those that don't. So I think it's very important that, as you can see, extremely and very high, we're quite high on the list that people believe that they want to constantly check on their credit history. And it's the same with the two cohorts, extremely high and very high for Gen Z and millennials. So people agree it's important, we need to check our credit. So let's make sure that we give access to them to do this. In Rwanda, one of the things we're doing is we've partnered with one of the government department called Irembo to mass market the access of our credit reports. So we're using a channel where we're pushing our credit reports through a digital platform that is run by government, so that consumers can access credit. They can check it on the go. So that's how we're also working within our partners to try and solve for some of these things. And I think on this question, what was just interesting was, how frequent would you be checking your credit information? And I think taking out daily and weekly, I would focus on the monthly and say, most of our consumers believe that checking your credit history monthly is what is important and what is key. And I think it makes sense, right? That they constantly check their credit information month on month. For those that probably are active on the mobile lending, which is very much on the go, probably they might do it daily or weekly. But for those that get unsecured lending that is paid monthly, they want to check what's happening on their information. So, and the two generation cohorts really align with that sentiment that, you know, monthly, I think I'll check my credit information monthly. So working within our partner groups of exposing some of our solutions like Credit View, in Kenya it's called Nipashe, give access to our consumers their information on the go so that they can constantly review it and see what's happening there. And then this slide, I think, really speaks into the sentiment around alternative data. How much do you think it impacts your score? And this is a challenge that I want to give back to us as business people, that the more we keep talking about it and not being pragmatic and starting to open up the various data components that solve for alternative data or that allows for alternative scoring to be embedded in decision making, our consumers will never see relevance of it, right? So we need to really fast track the adoption of alternative scores, alternative data in our decision making, right? To give more visibility, to give more transparency. I mean, if you saw the M-Pesa presentation, you can see the number of transactions that are happening outside of the mainstream, right? So how do we then collect all of that and other various data sources that we have outside to improve visibility for our customers and for them to get access to credit, right? I'm going to wrap up with my last presentation slides on identity. So I spoke about the health, financial health of our consumers. I spoke about financial inclusion, right? And financial inclusion also borders on digital transformation, right? How our customers interact with us. And in East Africa or in other African parts, you find digital services a big thing. And with solving for digital access, you also create a problem of fraud. So, and I'm not going to deep dive into it much because Amrita is going to touch on it. But what is interesting is we still have a lot of people that shy away from using digital services. You see this, right? We had to think about this in one of our markets when we were trying to take one of our solutions to market of USSD versus mobile. We had to think about this, right? And most consumers probably even still trust desktop and log on to a website, right? Than maybe using other channels of digital service because they're not sure whether my information will be protected or my information is safe. So we need to think about authentication layers as we build these digital channels. We need to think about awareness as we constantly engage our customers to ensure that they feel safe, that their information is protected. But if you look at this, about 38% this year only do about 25% transactions online. We're still far off. There's a report I actually saw, I'm forgetting the source, that actually cited that most transactions in Kenya, you send M-Pesa, but the person withdraws the money and still goes to buy in cash, right? Which means e-commerce or social commerce is still a bit of a shy away practice by most of us, right? So we need to do more in creating awareness and confidence in these channels. Because as it drops, it should actually be the inverse in the next year, that most transactions should be going online than the opposite, right? And when you look into the digital attempts, what were the sentiments around it? Most of them were targeted by a fraud scheme, but at least did not fall victim, right? Which is what is interesting and also positive, that there's a bit of awareness now coming in. You know, fraudsters, I always say wherever I talk about fraud, are very syndicated, right? They know what to use to get to people, right? So at least as much as they're still trying to get to people, most of people do not fall victim to their schemes. I'm sure all of us who have received an email that tells us an uncle in UK has left me 50 billion euros. And on that morning, you were like, God, where am I going to get money for Matatu? And you see that email, and you click it, and the other guy on the other side is praying, God, thank you for this click that has happened. That's how fraudsters work, right? They work on our desperation, they work on our inability to understand the process. So at least we see our people are getting vigilant, and we need to do more as business to encourage knowledge around not just clicking, not just answering phone calls. Amrita will speak a lot about how vishing and smishing is now becoming prevalent in Kenya, right? We thought phishing was, but there are new methods, voice call, and you're already sending M-Pesa money, right? So we need to be vigilant when it comes to that. What were some of the frequent fraud schemes? Money or gift cards was quite high on the list. If I speak about it, then you start thinking I'm a fraudster. So I don't know what this is. Please Bear with me. But you can see it, right? You can all see it, that it's one of the schemes that was there, and Amrita will touch on a lot of these when she gets into her presentation. But consumers were mainly concerned about sharing their information. It even increased in this year because of these high targets on their data, high target on their information. So they're concerned about sharing personal information in this year in comparison to last year. And you can actually see some of the top reasons. Privacy was cited as the top reason. I'm concerned about sharing my information because I don't know what will happen to it. I don't know who's going to use it, right? Identity theft, somewhat coming in there. And when Amrita speaks about fraud, you see from a global trend, certain blocks have certain type of frauds that are similar. And as we come down to the regional and local, you see our frauds are the same. So our fraudsters are the same, right, in this type of the continent. So you see how she'll unpack some of these topics. But this just gives you a reason why some of our consumers were concerned around fraud. So as I wrap up, leveraging credit education promotes awareness, right? I think we need to do more to create awareness for our people, for them to understand, number one, the use of credit, accessing credit, and the importance of servicing that debt. Because when they do better in that space, it helps with them getting and accessing more reports. We need to streamline our acquisition process, like I spoke about digital services. There's been probably stickiness in the process. We see a lot of our consumers are staying longer on the digital channels. But let's leverage some of the onboarding data, onboarding solutions that are out there in the market. And then that in turn will help minimize the abandonment rates that we see. And then on identity segments, I spoke about what is top of mind for our customers, what they're concerned about, what they're worried about. And when we put all our risk measures in place, we put authentication layers in place, we're able to create confidence. And we're able to put something that we hold dearly at TransUnion, trust, right? We're able to embed trust in how we engage with our consumers. And then lastly, that will help all our business to flourish and grow because we'll be able to price our products better, we'll be able to offer more solutions to our customers. With that said, thank you for being an amazing audience.